I think DeFi, decentralized finance, is still one of the biggest and most relevant use cases for crypto, because essentially the killer app is finance, is payment. That is the killer app. I'm not looking for anything I haven't seen before. I'm very, very bullish on the asset prices in crypto this year towards Q3 and Q4. I do think we will see a lot of volatility.
So there is no inherent reason to assume that speculative bubbles are not going to continue and are not going to increase.
If you think about local communities, and this community can be a community, an online community on the internet, let them have their own money. Let them have their own governance token for their thing that they're building.
After all, this whole industry was meant to destroy the paradigm of a central actor determining what ought to have value and legitimacy.
My definition of crypto is it's a technology that allows us to price anything at any time. There's no 12-hour window, there's no weekend, there's no lag and whatever isolated market. It's a global permissionless technology.
GM Onur, now we're back for our second episode. In the first one, we talked about the state of macro, what is the zeitgeist, what are the trends, what are the big questions on a meta level that people ask. Now we want to dive a little deeper into crypto, which is one of the main sectors we deal with in our day-to-day work. What are the current trends? What is the current market sentiment that you perceive in the industry?
To analyze the current trends, I would love to do a quick history, a recap. If we assume everything started with Bitcoin and the year of 29, Bitcoin was a proof of network that allowed anyone to permissionlessly provide computation in order to mine blocks and get a coin-based reward. And it's for the first time it solved the double spend, which basically was significant it's a significant computer science problem to solve in a decentralized ecosystem. It's very simple to deal with in a trusted ecosystem, but it's a very difficult problem to solve in a decentralized way. And philosophically, we could argue why decentralization is important, but essentially, if you assume money as a means for sovereignty, it was a significant step, but it was also a meme. Keep that in mind. In the beginning, Bitcoin was laughed at and Bitcoin was considered a meme. It was this funny magic internet money thing no one gives a shit about, basically. As it didn't die, so we saw a lot of coins, we saw a lot of other proof of work chains, a lot of forks, we saw a lot of master nodes, we saw a lot of random stuff on bitcointalk.org, which was a forum where in the early days Satoshi, but also other early cryptographers and engineers were lingering. Was fun times. And in 2014, 2015, Ethereum came up, right? And obviously the main innovation was smart contracts. So you now didn't just have decentralized sound money, let's say, to simplify as a store of value, but now you had smart contracts or computation that allowed you to build more interesting experiences with it. And, we all know what happened. The DAO happened and whatnot. But to fast forward a bit, it was a third cycle where we had in 2017 the ICOs. And ICOs are pretty interesting from a coordination perspective. Again, everything I'm saying, take it with a grain of salt, because we all know that in the Wild West, 99.9% of what we're seeing are probably scams or grifts or very questionable projects. So I'm just commenting on a higher level meta observation here. But ICOs as a coordination mechanism were super interesting. We had a cycle. We saw projects popping up left and right. And some interesting technology was built. Then everything exploded. Afterwards, we had one more cycle, which was around 2021, which I would summarize as the DeFi cycle, probably. DeFi, to some extent, NFTs. But, beyond the empty promises of ICOs, we now had projects that just in a more decentralized fashion just popped up, maybe introduced a token later. Maybe they had some more interesting distribution mechanism, which was called yield farming at a time, which basically, instead of issuing all your tokens in this one big bang event, what about we incentivize people with a certain behavior to distribute our token? So we had DeFi. I think DeFi, decentralized finance, is still one of the biggest and most relevant use cases for crypto, because essentially the killer app is finance, is payment. That is the killer app. I'm not looking for anything I haven't seen before. I think that is a big misconception.
What do you think the misconception is? What do other people think that the killer use case is?
For example, if you say something like, with crypto, we should be able to rethink supply chains, or we should be able to change how a real estate purchases work. I mean, all of those things will come on chain at some point, but I don't think we need to build a chain specifically for those use cases. I think those are things that the crypto primitives we have need to support and satisfy. However, to me, the killer app, I'm a computer scientist, so I probably think about it more from a technical perspective. But for me, the underlying technology and it being decentralized enables us to do these things. And this is what matters for me. And I think decentralizing finance, and again, money and finance, I think determines the sovereignty of nation states. So it is very, very significant cornerstone of a nation. I think this is what excites me. I think this is what crypto was made for. But to make the point and go over the finish line here, the current cycle we are in, and I believe we are in a cycle, and I also believe that the cycle is not over yet. I don't even know how to call it yet. I think names are given at the end when it becomes clear what the cycle was about. I would say to some extent we had layer ones, layer twos. To some extent we had derivatives like liquid staking protocols and the eigen layers of this world. But to some extent, we also had something like memes and meme coins. And that is something I want to touch on just very brief because, having been in the space for a very long time, I think especially what happened in the previous cycle where we had DeFi summer and all the NFT craze, before the good projects that everyone was hyped about hit the market for retail, they were already valued at billions of dollars in valuation with a low float. Insiders, whether it's investors or the team, they dumped on retail and made millions. And I don't want to call this a scam, but it's very disheartening. It was very disheartening for crypto retail. And I think many, probably almost 99% of the traders or retail lost money on this. And I think as a reaction to that, something like meme coins or NFT communities that ended up with a coin afterwards came up, which is basically you throw a bunch of shit at the wall and see what sticks. And if something sticks and there's a community around it, around the fun topic, you just do that. I don't want to repeat what the messiahs of meme coins are saying, aka Murad and a few others. But obviously, you could also look at these belief systems or cult-like movements on the internet, which I think there is some interesting point to that. But I also don't want to overinterpret religions into that or whatnot. So
you can view it from a non-religious perspective. Money in of itself has always been a social construct. There's no physical necessity to money. It's only the thing that enough people agree upon to be money, and then it suddenly becomes money. It doesn't matter whether it's shells or gems or gold or whatever it has been in the past, or funny picture of your overlord or your president or some relevant historical figure printed on a piece of paper, or if it's something completely digital like Bitcoin. Its value is determined by, one, the price and the belief of people in it.
To some extent, yes, but there's also very simple, undeniable facts, such as if the government forces you to pay your taxes in a very specific currency, that de facto is money. And that de facto creates demand for that currency. And that is an incentive for you to receive your salary in that currency in order to pay your taxes and whatnot. If something is legal tender, which means merchants need to accept it in stores and you name it, I think that is important, and that these are important policies that also determine what is seen as money and whatnot. I hear it's more about what is the value of these things. I wouldn't call them money, but I do see a lot of value in them. As I hate all these words, whether it's digital collectibles or what people call these things. To me, it's just tokens, right? So I do see a lot of value in these tokens. I'm not sure if they're money.
Probably not money, but in this broader trend of financializing everything, which crypto enables us to do, essentially the three big crypto use cases so far, and let me know if you disagree with them, is first of all, Bitcoin as a system hedge against this fiat monetary system that is imposed by decree. Then you have stablecoin as like permissionless access to US dollars and transferring them. And the last one is that entire spectrum of speculation infrastructure and speculation tooling. And meme coins are one symptom of that. What they describe is, okay, instead of trying to financialize a company with cash flows, you financialize a belief system. because these things arguably do have value. You don't have any strict metric like a discounted cash flow model or with growth assumptions and interest rates and all of these things where you can converge on an supposedly objectively correct valuation of this thing. But there arguably is some value in it. Do you have any idea how you would value one of these culls, one of these meme coins? What are some metrics to look at on a more meta level? How would you determine what constitutes value and what not?
Okay, so to start with the last question, how do you value these things? The mechanism behind it is very simple. You look into the market depth of liquidity, whether it's a constant product formula, which is the Uni V2, automated market making, or whether it's a different form. And you can do the math in the sense of, okay, if this has $1 million in inflow, what's the market cap going to be? In general, this is something why these meme coins are so popular is they favor traders because the liquidity is relatively thin. There's extreme volatility. So individual traders can make a 2x, a 3x, a 10x, a 20x in a fairly short amount of time, but also a minus 99% in the same amount of time. So it's very dangerous. It's the casino, as I would put it. And how I see this in general, there's this narrative of read, write, own, which is pretty popular. Let's start with read and write, right? You don't think about the right internet. You think about social media, producing content, YouTube videos, Instagram posts, and stuff like that. So if we assume that is what write enables, then I would ask the question, what is what own enables? What own enables is pricing anything. So my definition of crypto is it's a technology that allows us to price anything at any time. There's no 12-hour window. There's no weekend. There's no lag and whatever isolated market. It's a global permissionless technology that allows you to price anything, whether it is a piece of technology, which, by the way, I don't think makes sense. I don't think all of these tokens attached to the tech itself being valued at billions makes sense. At least the cash flows and the revenue do not justify those valuations at all. So we have to rethink the valuation of tokens. Whether it's attention, whether it's a real world asset, whether it's a security, at the end of the day, we've created a technology that allows us to price anything. And guess what? People are more interested and have more fun in pricing their funny memes than trying to price your fancy ZK layer. Who would have thought?
No, I agree with that. And I do think that there's inherent value in speculation itself. I think that the whole, crypto is all speculation. I mean, for God's sake, everything in life is speculation. We're living in the realm of uncertainty. One thing we touched upon in the last episode about macro is that there have been so many constructs and narrative in place to artificially smooth out volatility that by nature is there. And crypto is such a great tool to expose all of that because it is very hard for centralized, powerful actors to interfere. The people who engage, who are the participants of this industry, can bet on anything, tokenize everything, financialize everything, and it's just a very free expression of your thesis because you're suddenly not dependent on getting approved your brokerage account with Schwab or whatever anymore. You can just go on a decentralized exchange and bet on the thing.
So if people didn't know it yet, Max is German. Now that was the ultimate docs. To put things in perspective, Bitcoin has been on the rise for a long time. I think there is a temporary stop to that, which is roughly hitting the market cap of gold. I think that mission will be fulfilled soon.
Do you have a rough time horizon for that?
And I don't think about it like that. It could definitely happen faster than people think, especially now with Bitcoin being part of reserves and being legal tender and being added to private companies' treasuries. It could happen fairly soon. However, it could also take 10 years. I don't know. However, I think it will happen. And that would put Bitcoin, give or take, roughly at $1 million. I think after that, Bitcoin will probably just follow the overall financial market without any asymmetric upside anymore. I still think there will be volatility, but it will become less and less. Asymmetric upside within crypto will move to other places. And previously it's been altcoins, layer ones, layer twos, And I think this cycle, it will be, again, not judging this. I don't find it good. I don't find it bad. It's just an observation. But I think it will be in meme coins or these intersubjective culture coins, or however you want to call it. And that is pretty significant because when Bitcoin started, it was a meme. It was literally a meme. And talking to Bitcoin maximalists now, I find it funny. Bitcoin came a long way, and I'm more than thrilled about where Bitcoin is. But delegitimizing new projects from the Bitcoiner community just doesn't make sense to me. It's literally the reason why Bitcoin existed, why people enabled and legitimized it and encouraged people to use it or adopt it. Or now you're doing the same with other things. I think this is also an interesting way in the concept of localization. If you think about localization, not just about geographical localization in the world, but if you think about local communities, and this community can be a community, an online community on the internet, let them have their own money. Let them have their own governance token for their thing that they're building.
After all, this whole industry was meant to destroy the paradigm of a central actor determining what ought to have value and legitimacy. And now, once one of the assets, Bitcoin, has, at least to some extent, succeeded in that, it's somewhat hypocritical to act as this supreme moral instance on the top of other projects. One narrative that has come up in this cycle, besides meme coins, is the layer 1 premium collapsing. Do you have any take on that? My thesis would be that, okay, if we see an actual success in the implementation of crypto and blockchain technology, the layer 1 part will become totally commoditized. And it is no longer relevant what L1 you build on, but the audience capture, the culture capture, the community capture will all happen on the application layer.
I do 100% agree with that. To keep it simple, I think L1s will be commoditized. I think block space is a commodity. We have an overproduction of blocks, of empty blocks. The technological differences are marginal. They're not significant. In that sense, I do think it's a commodity. Block space is a commodity. What's interesting is order flow, especially uninformed order flow. Where does the order flow come from? Who owns the narrative? Who owns the community? Who owns the user base? And who can direct them to a certain block or to a certain smart contract or to a certain experience on chain? All of this on chain nonsense. And again, I love building chains and I love wallets and running RPC nodes. But to the user, why do they even know what an RPC node is? Why do they have to put a port? Why do they have to configure a wallet and sign a transaction with their key? I mean, I do understand. It does make sense, but sometimes people talk about how do we bring the next billion users on chain. I don't think it will be with keys and wallets and RPC nodes. It will be something that uses blockchain behind the scenes. I do have some opinion on layer 1s, but I think you don't have to overcomplicate it. Just look at the data. Just follow the on-chain data and you'll see what's happening. There's still moderate usage on Ethereum. There's a lot of usage, especially on the speculation side on Solana. There's a lot of usage on Hyperliquid. There's some usage on Base, which is obviously pushed by the entire Coinbase ecosystem. That's probably it. That's probably everything that's relevant. I would even say ETH and Solana is really where all the music is in terms of volume and users. Not to say other chains aren't building interesting things, but I think those are subcultures and niche communities as opposed to the President Trump launching his token on Solana. It's a very different signal than a sub-community experimenting with new liquidity pooling on a new layer 1, which requires a new wallet, which requires bridging your funds, which no exchange has connected to yet, which will take 2 years probably for anyone to send funds there. So that's why I think ETH and Solana is where the music is this cycle.
Yeah, I find this debate somewhat overrated right now in the crypto circles. On the asset side, it's a legitimate debate to have because ETH has underperformed terribly this cycle.
Yeah.
Sol has performed pretty well in 2023. In 2024, it sort of kept up with Bitcoin. Now in 2025, it's down a lot. But I mean, on the one hand, the L1 space is large enough and there are enough subsets of applications that it is not a winner-takes-all situation. It can be distributed among a couple of layer 1s. And again, if blockchain truly succeeds as a technology, we will not even be aware of what L1 we are on right now. If the whole interoperability stuff actually gets abstracted away and we have a smooth user experience in on-chain usage, I don't even care about what L1 I am on. To play down the ETH ecosystem, I don't think is the right path either, because if you look at the innovations in terms of mechanism design, most of them still happen on ETH. You had Pendle with interest rate derivatives, Ethena with making this basis trade around stablecoins accessible, Hyperliquid, which was a huge improvement in perpetuals trading user experience, and Fluid is capital efficiency on the decentralized exchange space. All of these things are still very Ethereum and EVM ecosystem native. If you look on Sol pretty much captured the entire influx of new retail users this cycle.
Yes.
It was a very short-lived meta, unfortunately. If you're building something that is very consumer focused, where you don't require like a lot of on-chain expertise, and you just build something that requires a fast chain and a cheap chain and build on Solana. But I think this competitiveness between these two communities is somewhat overrated because they are targeting fundamentally different audiences right now.
One thing that Sol has yet to prove, I'm not talking about the coin or the currency, I'm talking about the ecosystem and chain. There's been a ton of value that's been extracted. Whether that extracted money will be reinvested into the ecosystem or not, I think will determine if it will make or break it. For example, Pump.fun, which is a launchpad that simplified the creation of tokens in the category of mint. So it allows anyone to mint a token. I think they will reinvest a big chunk of their profits into the Solana ecosystem, build new products, get new users, improve the experience. I actually think they will be a net positive for the ecosystem. On the other hand, Trump coin, Melania coin, Libra coin, and all the value that has been extracted from that, I think is a net negative. This money will not be reinvested into the ecosystem. And I'm not even talking in the sense of making users that lost money whole. I'm talking more about, we spoke about macroeconomy and nation states in the previous episode. I'm talking about from that perspective. Ideally, the money that is generated is being reinvested into the ecosystem that you're seeking to grow. And if Solana is able to do that, it will do very, very well. Again, this is not a prediction on the Sol price. It's just like looking at the ecosystem as a whole.
I agree with that. To slowly wrap it up, what are the narratives? What are the mini cycles you expect? What are you bullish on? What are you bearish on going into the remainder of 2025?
Okay, so after the inauguration and after the Trump, Melania, and Libra coin, there's been others, but those were the biggest. It's been down only, right? And only recently we're slowly starting to recover and have a few green days. I think we're gonna slowly recover. I think we're still in the cycle. Around Q3 and maybe Q4, we're probably gonna see we're probably gonna see the leg that excites people in the cycle. If you ask me why, I'm purely reasoning from gut feeling, sentiment, previous cycles. Now, if you touch on the change in the 4 cycles theory and in microcycles, again, assuming Bitcoin will hit the market cap of gold and roughly reach $1 million per BTC, yes, I do think the cycle dynamic will change a lot. And even now, it's no secret that towards the midterms of Trump, they want the Fed to cut rates, they want the QE policy, and they want the markets to pump. I don't think that's a secret. Trump's world liberty is positioning itself to make a decent cut, and I think that will happen. Why would I bet against that? What is the information I have that they don't have? There's nothing. So in that sense, I'm very, very bullish on the asset prices, especially in crypto this year towards Q3 and Q4. What happens afterwards? No one really knows. I think it doesn't make sense to try to predict cycles, but I do think we will see a lot of volatility. The volatility will not go away. It may reduce for BTC, but I don't think it will reduce for especially something like meme coins.
I agree with lots of your outlooks there. The, at least officially, single most powerful individual and family in the world now has the majority of her net worth in meme coins. if you told somebody about that 4 years ago, I don't think they would have believed you. So there's certainly an incentive alignment there. And one of the conclusions from our previous macro episode has been that QE on a long enough time horizon is deemed to return and continue, because otherwise you won't be able to keep up refinancing government debts and all of that stuff. So there is no inherent reason to assume that speculative bubbles are not going to continue and are not going to increase.
I do agree with that. And I also don't try to predict that. I think a better approach, instead of trying to time the markets, is just to try to read the markets and act accordingly. And to your point earlier, I didn't really touch on that, but I'm very, very bullish on the entire stablecoin economy and tooling and the layers, whether it's on the licensing side or on kind of higher up the stack on the APIs or even end user consumer products. Crypto enabled stablecoins, I think, will change the economy of every nation in the world. And while we're doing that, yes, other crypto will be in the mix.
And the US has a big incentive to foster the adoption of stablecoins. Tether, one of these stablecoin companies, is among the top 20 or even top 10 holders of US treasuries right now. They hold as much treasuries as Norway or Germany. It's the easiest way in a non-violent manner to spread the dominance of the US dollar across the world. So yeah, I think all the Tether truthers have to go back into their graves. Didn't work out for them. At least that's what we all hope for, because if Tether or any of these major stables collapse, we would truly have a big problem in our industry. If that's a topic that any of you interests you particularly, we can definitely go into a deeper dive episode onto stable coins and these individual issuers. But
you know what that reminded me of Do Kwon saying, if UST goes down, Bitcoin goes down with it. It didn't.
Fortunately, it didn't. That would have been quite a hit.
All right.
We weathered it well.
Cool. Max, as always, it was a pleasure. And we're going to speak about some exciting stuff next, which is AI.
I'm very much looking forward to it, Onur. I think we've covered a great deal of the current market sentiment in crypto, and yeah, looking forward to the next one.
Awesome, man. Speak soon.